Welcome, everybody. Delighted to have back a very popular guest, Dr. Marc Faber, known as the author of the Doom, Gloom, and Bust report, someone who's been talking truth to the precariousness of our financial system for many a decade, sometimes to his own detriment. Too much truth can get you into trouble nowadays. Marc, delighted to have you back.
Thank you very much for having me. The report is called Gloom, Boom, and Doom.
Gloom, Boom, and Doom. Sorry, I got them in the wrong order.
Don't you worry, they're not important.
Excellent. I'm going to start actually with something visual because I feel there's something brewing. We've got another fake number to come out in terms of the US labor statistics. Recently, you're probably familiar, Marc, that they revised by 818,000 jobs that they've actually added in artificially as part of their assumptions model and the birth death model, etc. We've got another big number for this month coming on deemed the most significant US data release this Friday. And we had the interesting situation out east where you are, that the Japanese actually tightened now about 6 weeks ago or a month ago, I think, that we had our yen trade fears. The Japanese tightened a tiny bit, but there's obviously sensitivities in that, just as the US was starting to look like they would need to cut. And that led to a series of events that saw the yen spike in value, the dollar actually come under quite a lot of pressure. And we're technical, so I'm going to take you to that chart just to do it. There's a question coming at the back end of this, but the question, I suppose, is, do you think the depth of the degree of the carry trade has fully unwound? Or technically, like us, is there this distinct possibility that we could be seeing continuation occurring and a second leg to the downside? How do you see this whole event? Is it over?
Well, my view is relatively simple. I believe, and I've written 3 reports now that would indicate that we are at major turning points in asset markets, that asset markets that were going into one direction up will turn down, and asset markets that went into a decline for a lengthy period of time, like the Japanese yen, would turn up. So we are in a very kind of exciting period in the market, a turning point. This doesn't happen every day. Major turning points, it happened in 1973, a peak, and a trough in December 74, and the peak in 1980 for precious metals, and then a peak in interest rates in 1981, and the bottom in equities in August 1982, and then a peak in Japan in 1989, and then a peak in the United States in year 2000, and so on. So they happen every 10 years or so, or sometimes it takes 20 years or more. But I think this time we are at the major peak in, say, the major indices in America. By major indices, I mean the S&P and the NASDAQ and so forth, that were driven by just a few stocks in the last few years. And at the same time, we had bear markets that have lasted now by more than 10 years in emerging markets, and then underperformance of foreign stock markets vis-a-vis the US. And in currencies, we had strength in the dollar in the last 10 years, and I think that's coming to an end. So to answer your question, I think that the yen will continue to strengthen from here because the price level in Japan has come down meaningfully as a result of the depreciation of the yen. And that I think that this may continue for a while. I also happen to think, and a lot of people will disagree with me, but I think that the dollar, US dollar, is massively, not a little, massively overvalued against just about anything in the world.
Yeah, that's interesting because we have the yen chart up I will also just take the carry trade part of that out and show you even other failing currencies that have lots of fundamentals or reasons for skepticism. In fact, that probably applies to most fiat. But we seem to have upside setups for the euro with strong movement on the euro. We have similar on the pound. So again, we've been in a bit of a squeezing range here. And we like looking at the charts. And that appears to be a breakout to the upside. And we have a similar setup actually for the pound. So it does seem we're coming in for an error by my best estimations technically. And it seems to dovetail with your hypothesis that the dollar is about to be facing some challenges on its strength generally. And I'm just wondering, is this because the debt issuance is so high and keeping a bid under that debt issuance is proving very difficult? And maybe it's easier for the other valve on this geyser that is expanding and ready to burst, the currency, to take some of the hit for a while now, given that since 2020, the peak debt, the long-term debt market, some of them lost 40% plus recently with that steep rate increases. So are they going to let the dollar go a little bit? And surely, as a second part to that question, doesn't that mean we're going to see a washing back of inflation, particularly into the American environment, as their currency depreciates as well, if that's to be the case?
Yes, I mean, this is a difficult question to answer all in one, because it involves many different factors. But one thing should be clear. If we analyze the present situation, the Western world is over-indebted. There's no question about this. If you look at debt to GDP in all Western democracies, it's far too high. And it's exploded in the last, say, 10 years, especially post-great financial crisis, and then even more so as a result of COVID.
Yes.
So we have a very high level of debt. Now, the US, the big question is really, have they tightened monetary policies or not? Because to increase interest rates does not imply that money has become tight. I can give you economies in the world that have interest rates of around 100%, and they have easy money. The absolute level of interest rates says nothing whether money is tight or not. Money has become more expensive, but if I look at the action of asset markets, housing prices in the US are at a record, not everywhere, but across the board, at a record. The stock market recently made new highs, and we have many explosions in assets on the upside. This usually doesn't happen when money is tight. So there's plenty of liquidity around, and the dilemma for the Fed will obviously be, if they ease monetary policies here, what will happen to asset prices? And in particular, what will happen to inflationary expectations? I own bonds in the US because I think that we are in a recession already, so that bonds should rally. There's a side noise on your side, or an echo. Anyway, but the Fed can cut rates. The Fed can cut rates, but at the same time, bonds could go down. Because I, as a bondholder, I want to see tight monetary policies. I want to see a massive recession. I don't want to see easing as a bondholder. As a stockholder, I also own stocks in my portfolio. I love to have money printing. As a holder of precious metals, I love to see money printing. But as an observer, as an economist and historian and social observer, I'd like to see tight money for a very long time, for a very long period of time.
Yeah. But just to attack that, if we're going to see dollar weakening, it's probably there's going to be some elements of cuts that are being priced in, surely, which should actually see your bond values go up, but your return obviously come down. It should put a bid under the stock market, but often these reactions are deemed late. So you get the crash first and you tend to have that lagging effect as well. So I don't know if I expect stocks first to correct in pain, even on the interest rate cuts, until such a time as the cuts have been immense or large. I don't think we ever go back to the levels we've been before. The debt market, I don't think, can handle it with the issuance, the new issuance, because I think it's 96 days, a new trillion is being spent by our friend Yellen. So the supply is off the charts almost. So I'm kind of curious, dollar down. If dollar's down, we're seeing yen and potentially pound and euro up. So there's going to be an export advantage for the US. They're going to have inflation, I would assume, on everything they import, which is going to see a contraction on demand from China, which is going to lean on China a little bit because China also needs the Americans to be fairly strong. I suppose I'm just thinking it all out. There isn't really a question in all of this. But which asset classes do you want to be in a cutting environment? Is it not better to be cash right now, I suppose, and gold? I don't think the gold dips too much, but it can also dip if there's a liquidity event coming. And I suppose, so that's part one question. And the second question I would say is, if the yen carry trade isn't over, we should actually see the yen become the refuge currency, the fear currency, and the dollar could actually, instead of going up as it usually spikes when there's crises, it could go down. And then the cure of quantitative easing, when it comes in, could make it go down further. So I'm almost wondering if we could have a really severe dollar downside on that basis. Without even getting a large degree of cuts. I don't know if you can make sense of that whole machine and all the different cups that are flowing into one another there. What would be your response?
Well, my response is please go on, because I have less work to do when you talk. I don't need to answer any questions.
Yeah, I'm just curious. The asset class.
I explained to you already. I explained to you already that in my view, the dollar is way too high. It's grossly overpriced. That was my view that I explained.
Yeah.
Now, you may ask me the reasons for that. I just look at the price level of different countries, and I look at the money flows. All the foreign money flowed into the US, into NVIDIA.
Yeah.
And the other several magnificent stocks. But once these stocks begin to weaken, the money will flow out. Yeah. And once they cut rates, money will flow out. You asked me about inflation. I said, most likely we will have a pickup in the rate of inflation, that interest rates will continue to go up. I explained to you that I, as a bondholder, I want to see tight money.
Yeah.
But if they cut rates, I'm less sure about owning 30-year bonds in the US.
Yeah. Yeah.
Okay. But you understand, I think the Fed and policymakers will have to decide, do they want to keep a strong dollar, which may be unpleasant for the economy? Or do they wish to print money to keep supporting the asset markets, in which case the dollar has, in my opinion, it's my opinion, and other people think differently. Our friends, they think the dollar is the best of the evil paper currencies. But that's not my view. My view is the dollar has a huge downside risk. My view is that if there is a Trump administration, they may create a massive US dollar devaluation, or they could introduce a dual currency. Many countries have tried to have a real economy transaction exchange rate and the financial exchange rate. It's fake
Yes.
in each instance. But we have politicians that will do whatever will fail. They are interventionists that are arrogant and they think they know. When in fact, one of them, the candidate Harris, has no clue about anything.
Yeah.
Anything. You can ask any subject, she's clueless.
Yes. She's well. I think
About one subject, but I'm not allowed to talk about that on a public channel.
Yes. No. On Harris, I don't think she manages or looks after anything. I mean, they give up. They certainly, by the quality of people they put as the front man, they certainly underlie that these people have very little consequence on the decisions that are being made, because to allow them to do such would be like letting a chimpanzee drive the bus. But anyway, going back to that's
I wish they could have a chimpanzee driving the bus. I wish.
Indeed. On the my take out of that is I concur with you that dollar weakness is on the cards, and I think we're in agreement on that one. And I think that's because of the epic level of debt issuance and the hypervaluation. I mean, we used to consider the Nifty 50 as being a very narrow market at bonds. It was, there's just 50 stocks driving the whole market. And in today's essence, we actually have the Magnificent Seven, which is ever more narrow. And it seems even the Swiss, the Swiss National Bank is almost like a hedge fund that is heavily invested in this. You even have central banks engaged in, the escalation of these assets. So in that environment of a weakening dollar, this should be very good for, obviously, the gold dollar price. So you mentioned you had precious metals. Do you want to talk just about your take on gold in this environment as well?
Well, my take on gold is the same as it was for the last 40 years. That in the long run, in a money printing environment, gold is not necessarily the best performing asset, but it's a relatively safe asset, and it will maintain its purchasing power. Let's say if I look at the gold price in 1970, it was at $35 an ounce before the Nixon devaluation, and now it is at, I'd say, around 2,500. So the price level has gone up between 1970 and today, but the gold price has, I think, to be fair, kept about its value, its purchasing power.
Yeah.
Better than cash. But, I mean, I'm not saying we will have a boom in gold price, but I'm of the view that financial institutions, they're run by portfolio managers. The portfolio managers are all people, they went to Harvard and all these universities and Yale and so forth. And they are conditioned to own stocks and bonds. And if you look at the composition of assets by fund managers, their involvement in the gold market is tiny. It's like if you look at the component of oil and energy stocks within the S&P. At one stage in 1980, it was over 30% of the S&P was energy and energy related. Now, something like less than 5%. So there are some sectors that in the marketplace are underrepresented. And I think financial institutions one day, a fund manager will be asked by a client, look, do you own any gold? And he will say no. Then the fund client will say, well, are you mad? I mean, you can see that there's money printing and inflation accelerating it. I think inflation will go much higher than we are now. It may drop in the 6 months to 1 year, but I wouldn't be surprised if we had inflation of around 100% per annum. Wouldn't surprise me, and interest rates around 70%. So I want to have some gold, and I've been buying gold since 1985. That's when the gold price had collapsed. I started buying every month, and I buy every month. From time to time, I take larger positions. I also own some gold shares, but I have to say that the performance of gold shares up to now, it may change, but up to now has been an utter disaster.
Yeah.
Performance.
Yeah. Some of the majors are starting to just turn. They're Newmont and some of them just showing some livelihood, but we'd need to see a lot more before we get excited about the gold equities. It's a later stage, which tells me in a way, Mark, that this is early doors because gold is moving, but the gold-silver ratio is still very, very high. And the gold shares are not yet moving. And it's the firing sequence of the engine, the cylinders in the car. Number one cylinder is the gold commodity itself moves. Then we need to see a bit more heading towards new highs for silver. And then we will have also, I think, which points to this. Actually, we're early in the cycle. It's just a super cycle. Does it feel like that to you, or am I offbeat?
As I said, my major position is in physical gold, which I like the best because I don't like paper. We have to be aware when the big bubble will be deflated, paper will suffer more than physical. But I have to admit that gold shares compared to the S&P 500 and gold shares compared to the price of gold, ditto for silver, are incredibly low. So I own the shares because they appear to me to be incredibly low. But you asked me before what my view was, and I said to you, the gold shares have acted horribly. It's a complete disaster up to now. I may change. I hope it will change because I have quite a few of them. I don't depend on them going up, but basically gold shares have been incredibly disappointing. That is the fact.
Yeah, yeah. But going back to the question, could this be a larger cycle and we're just having to bake in a lot longer period and wait for more people to realize that gold is not just having a once-off spike, but that this is a sustained period of inflation whereby gold will not only hold these levels but continue to make new ground. And as a result, more people will start to say, then these miners are cheap, then silver should be responding, and we start to get those second stage precious metal bull market effects in the equity and the silver itself. So is it a bigger cycle? Is the question?
Yes, it's possible. I hope so. But up to now, it's not been the case. I hope so. And by the way, if you believe, I also tend to think that this upcycle in inflation and interest rates will last a long time, say 10, 20 years, and that this upside of inflation and interest rates will surprise everybody to being completely disoriented. You understand? I have many books about inflation and so forth. It's a very difficult subject to understand. But I think there are other commodities that could do better than gold because they're cheaper. Last year, cocoa went up and went ballistic, and this year, coffee. So every year you'll have these commodities and also stock markets. Money will flow out of the FANG and the Magnificent Seven, go into some sectors of the market, and then there's a bubble there building up and so on. This is money printing. That's what happens in periods of money printing. Assets don't move up evenly in a society. They move here, they move there, and so forth. And some people are more lucky at predicting these asset bull market shifts than others. But I find it very difficult to know exactly what will boom the next. One thing I can say is people are going to lose a lot of money in this bubble we are at the present time, and they will start to smoke more and they will start to drink more. So I've been buying some tobacco stocks and beverages.
Yeah, the sin taxes and the sins. It feels to me like there will be a kind of Western global austerity with an incredibly stubborn and high tax rates taxing people from the bottom up, which is the cost of everything. There'll be margin creep. Their real incomes will actually be dropping. And you're also going to have increased taxation, active direct taxation from governments that have problems with servicing the extremely high debt levels at the higher interest rate levels we both expect. So it seems generally it's going to be a constriction on the middle classes, the working poor, and the upper middle classes. And the only people really doing well will be the billionaire classes that have assets on cheap money that they bought long time ago. Is that a correct encapsulation of the general Western experience that you see coming forward?
Yes. The debt problem of the government, I need to point out, is a creation by the government. So the government has grown larger and larger. The freedom of people has shrunk, and a huge wealth transfer is occurring from ordinary working people to government officials, most of whom have never worked a single day in their lives. They went to communist, socialist universities in Western Europe. They've been taught the lectures of Marx and Lenin and all these characters and Proudhon and so forth. And all they want is transfer wealth, not from the rich to the poor, but from the rich to themselves. That I want to make crystal clear. The government officials nowadays in the Western world do not represent the people. They represent themselves, and all of them are corrupt and liars. All of them. Even they join the government after 10 minutes in government jobs, they're liars.
Absolutely. In an example of a avatar of exactly what you've described, in the United Kingdom, we have a new prime minister called Keir Starmer, who is a World Economic Forum candidate. And he won a huge majority because people were very unhappy with the Conservative Party that was allowing unfettered immigration, that was meant to be the center-right party, but somehow just forewent the indigenous citizens and failed to restrict that. And he's won such a huge majority now as the new party. He's already telling, they're coming for their first budget, he's telling that it's going to be deeply austere and painful because he has all the seats, he's largely uncontested. He has the political license now to actually inflict damage on the UK population in a manner that is unlikely to be seen before. And he is preparing them for a devastating budget, which is going to be directed supposedly at the rich, but it's actually going to be more directed at the middle classes, the upper middle and the middle classes. And even, I suspect, the working classes are still going to feel the blowback from this. It's going to be a reduction in services. He's taken away a heating allowance for pensioners in the north where it gets cold, these kind of things. So it's exactly as you say. He's not working for his people. He'll continue with the immigration policies. It does feel like the decline of the West. It does feel like totalitarianism. It does feel like a very difficult environment for the average person to build wealth and retain wealth. And actually, I've gone so far as to say to our audience group in the West, and I don't know if you concur with this, because this is the question, it's time to leave your home country. It's one of the hardest things to do. I know it's something you've obviously done. I doubt you were born in Thailand. It's something I've done. I had to leave South Africa. But many people, they're gonna fail to take that step. Is it good counsel to move to an environment where you maybe were a far from perfect nation, say like Thailand, say like the BRICS nations, but at least the trend and the trajectory is not towards totalitarianism, lockdown, and extraction, maximum extraction? Should people be thinking the unthinkable and leaving the West?
Yes, they should, but you have to understand, people in their 60s and 70s, they have their friends in the environment where they live, in Scotland or Ireland or England and so forth. And to move to a completely new environment is for some people difficult. I lived for more than 50 years in Asia, so I feel comfortable here. And I would not go back and live in Western Europe for a variety of reasons. I'm Swiss citizen. I wouldn't go to Switzerland either. But I can see that expatriates who come, say, to Chiang Mai and live here, it's not all heaven on earth. The price level is lower, but certain things are more expensive. Say an elderly couple here would have difficulties to get health insurance here. They would have to take the health insurance which they already have. Or I don't know. I don't have a health insurance. And I have many friends who are not very affluent. As soon as they had a serious sickness, I told them, look, the two options. Here, you don't have the money to pay for the health care. So if health is your consideration, you need to go back to Germany or Switzerland, where they will take you regardless of your age and pay for your hospital bills.
Yeah.
I have 2 or 3 friends, I already paid their tickets because I had no money. So I said, without money here to be sick, you have no chance. In Europe, you have a chance to live another 2 years with cancer. Maybe you solve your problems. But you understand, in life, people ask me, how is life in Chiang Mai? I said, for me, it's okay. But is it going to be good for you? I don't know. I know a lady, she's very wealthy. She hated living here in Chiang Mai. I don't hate it. I have a wife here, the daughter, and I have my life and my friends and so forth. I think for me it's a good option, but not for everyone. And then there are other countries, someone would have to travel for an extensive period of time and go to maybe Laos and Cambodia and also Indonesia and the Philippines. And some people like the sea and they want to be nearby the sea. And some people, I also have a house on the beach, but I prefer to stay in a place which has 4 seasons like Chiang Mai, and where the climate is drier. It's not as humid as the south. So all these things, someone has to go and find out for himself, and nobody can give an advice on that.
Yeah.
Yeah.
Look,
Missions where you go and so forth. And some people can, and some people cannot, and some people who are 60, 70, it's more difficult at my age to make new friends than when you're 20.
Of course. Of course. And I definitely recognize the pensioner. The pensioner has a different challenge. Our audience would probably be in the 35 to 55 range, where there's still some career left. They might be in jobs in IT. We have a lot of people that are in tech jobs with big corporates, and there's still some living. Some have, teenage kids and even younger, and it's all about. It's a big decision, isn't it? But if the ground underneath you is moving, it's not this I suppose my point is, if you're not reliant on the system for health at this point, and you're still a productive contributor by a taxation, let's say you're working and you're being taxed, the ground underneath you now is changing negatively in almost all aspects. In short, we're at peak West, and it's a deep, steep downhill. In fact, we're probably past the peak. If you are in a productive job or working business environment, it should potentially be something you should consider, on the basis that you're going to have to work a lot harder, you're going to keep a lot less of your money, and the services that the government is giving you are going to be reined back. And all of these extractions will be on account of government's own mess. And many of them you didn't benefit from. So like the hundreds of billions sent to Israel, sent to Ukraine, all of this, you're paying for that. Maybe you don't want to carry that burden, and it's a decision. It's a decision tree. The answer might be you stay, but it's at least a point of thought and focus, I suppose, because it appears to me it's decline of the West, and that's, I suppose, my point.
And what is the question?
Well, if it's the decline of the West, is it a decision point? Should everybody be thinking, at least, do I see? But because I suppose the question in that is, to do nothing is actually to make a decision. It's an inertia-based decision. You're going to stay with that familiar. At least people should maybe be aware that by every day they stay in the West, they have decided what they are understanding that they're committing to. A potential participating in the decline, the downtrend of a society. And I suppose there's a question in that, should everybody accept it with that mental framing, that for every day they stay, they are committing to a journey path that is not particularly pleasant?
Well, I'd like to answer this question the following way. If you look at Western society, how incredibly affluent they were relative to the rest of the world in the year 1900. We're talking about relative sizes and relative wealth and so forth. They were really way ahead of the rest of the world. Nowadays, you go to Singapore, you go to Seoul in Korea, you go to Taipei, you go to Shanghai, you go to Beijing, to Japan and so forth. Many societies have caught up with Western standards of living and per capita income. And then you ask yourself, how was it possible that Europe had this leading position in the world and lost it so rapidly? Of course, we all know that the socialist ideology is not about building wealth, but it's about destruction. It's a philosophy built on envy. Envy is the driving kind of instinct of the socialists. Destroy wealth of the wealthy people. Now, the wealthy people, in every society, the elite always had the power. So if they lose it, what do they do wrong? Well, I've observed this in Switzerland and also in Germany, because in Switzerland, I'm known that I reject the right-wing party, because for me, the right-wing party in Switzerland is too left-leaning. And they're not in the center or to the right of the center, but they're already left. So I want to be 100% on the right side. Rejecting, say, Social Security. I'm rejecting any government influence in the economy. I'm a so-called libertarian.
Yes.
All my friends who say the Austrian economists, they come and say the government should do this and government should do that. I say no, the government should do nothing at all. Stay out of the economy. In any event, the rich people in Europe have caused this problem because what the rich people are afraid of are the socialists. So what do the rich people do? They do not support the right-wing parties. No, they support the socialists because they know that the socialists are the most corrupt people. Well, if you're rich, what you're worried about is expropriation and high taxation. Well, you support the socialists and you bribe them so you have a free pass.
Yeah, it is true, unfortunately.
It's amazing that in America, you look at the big corporations, they're creations of the capitalistic system, whether it's Kodak or Coca-Cola or whatnot, they go and support BLM. They're crazy.
Yeah. Yeah, I think that's a defining quote out of our talk so far. That I think you hit the nail on the head, because libertarianism is in fact a principle, and it attracts principled people. Self-determination, principled self-reliance, capable people. And these are not the people that are looked favorably on corruption, taking bungs, and perverting their principles. So socialism, which is built on envy and destruction, as you've said, is very up for corruption because it inherently lacks principle. It is a zero-sum game. I want what they have, not what I create. It's that game of envy. And I think that key point is something I really love that you mentioned, and that's a real big takeout. So the corruption is invariably a leftist and socialist concept that is gets its best oil to the squeaky wheel. That's where you will get your traction. Even with big corporations, I would also say, maybe you've noticed this, big corporations are no longer even libertarian themselves. They are almost part of entrenching the socialist. It's a fascism. It's a corporate fascism now. It's actually small and medium enterprises that are the drivers of self-reliance and some of the biggest employers. But they are getting crowded out, and they are getting red tape put on them, barriers to entry that only big corporates can typically fulfill. And that the socialism and big corporatism have actually become a partnership, as you mentioned with your Coca-Cola and BLM example. Do we have too big a corporation structure that has become too embedded in the socialist political, cultural Marxism agenda?
Well, the sad truth about this is the government officials, the ignorant people. I mean, a prime example is this Keir Starmer in Britain, or Baerbock in Germany, or Habeck in Germany, or Scholz. These are people that never run a business. You understand? They never work in a job. They don't know how tough small businessmen have to fight. And the toughest for the small businessman is not like you said, the small businesses are being crowded out. They are being destroyed deliberately by the government. The government in socialist society wants to control everything. In other words, there's no private property under socialism and communism. The state owns everything. So the state wants to own the big corporation and then negotiate with the big corporations what the prices are and so forth. So the model comes in with price controls and so forth. But the enemy of the government is always the farmer and the small guy, the small business owner. They want to eliminate them.
That's right. They're like pay-as-you-earn taxes that are taken.
Because you understand, if you're Starbucks and there are lots of regulation and you're a big chain of whatever, fast food or coffee or whatnot, you have a lawyer. He specializes in air conditioning and these kind of regulations. Then you have a lawyer. He specializes in health care and hygiene. Then you have a lawyer for contracts with the building owners and so forth. The small businessman, he doesn't have this knowledge. So for him to open a coffee shop will be more expensive than for Starbucks. Starbucks, they know also with whom government official they need to negotiate and how much they need to pay under the table to get the licenses. The small businessman, he goes to the wrong people in government, pays here, then they say, no, you have to go and pay there. By the time he's opened his coffee shop, he's paid so much money, he's bankrupt.
Yeah. And of course, the tax that independent coffee shop owner would pay is far higher than the conglomerate of Starbucks, Google, and the like.
Of course. And the small business owner, he doesn't have experience with labor negotiations and so forth. So he can be taken to the cleaners, where Starbucks, they know how to deal with the workers. And then comes another point. When something happens, we have COVID. Who has to close the shops? The small business owners. Who can keep it open? 7-Eleven.
Yeah.
This is the fact.
And I would point Amazon hoovered up a lot of small retail as well. You actually had news broadcasts saying how much care they were taking in their production and packaging to ensure no viruses were being transported, and how they continued to operate throughout COVID. So it was almost you had statusism advertising for a mega corporation, which is astounding, at the expense of their small business operators that they closed down. So, I mean, the events of COVID were, it was a pullback of the curtain in some senses, and a major exposure for people that had been sleeping. I think it woke a lot of people up. So Mark, coming back to the financial side, I think we're in agreement we're going to see a weaker dollar. We're in agreement that gold has a decent future of continuing to hold value in a debt fest and a downturn in the West. Where are the economies that you think will be doing best? For everything that's going down, talent, money flows, liquidity is going to go somewhere else. As some place becomes less and less friendly, like California. They say California, for example, is America 10 years ahead. You have Americans saying that New York and California are no-go zones for business people. There's no reason to go there. You'll get messed around. It's coming out. This is the advanced vanguard of the socialist disease that is slowly taking the entire bull down like a parasite. In the same way, if America is going to be California in 10 years' time, there's going to be a flow out. The best programmers, the best computers. Suddenly, the garage unicorn companies that were Apple, Microsoft, that all only seem to come out of Californian garages are now going to come out of Singaporean garages, Middle Eastern, who knows? Where do you see the nation-state beneficiaries of the downscaling and deflation of the Western axis? Where do you see the expansion? Where's it flowing? Because business activity is going to go. Your favorite nations, surely Southeast Asia and many of the nations, they are going to get some benefits. Great demographics in Indonesia. Where's the listings? I see Singapore. What's your comment on who benefits out of the deflation of the West, the fall of the West?
Well, I think we need to entertain the idea that if we have had this colossal asset inflation in the last 40 years, and if it has come to an end, the asset inflation, then everything can go down, but some things will go down more than others. So let's say if we make the assumption that stocks could drop 30 or 50%, and we own gold, and we expect that gold will go up, that may not be the case. The case may be that gold holds up relatively well, that when the stocks drop 50%, the gold price only drops 10%. So you are relatively becoming very wealthy if your assets only drop 10% and everybody else's assets drop 50%. You understand? We
Yes.
could be in an environment of asset deflation. It's possible. Or of asset deflation in real terms, inflation adjusted.
Yeah. Yeah.
If that is the case, I have to say there's not many things that will go up, but there are things that will go down much less than others. And I don't think that Asia is dirt cheap yet. But some assets in Asia are cheap, like property stocks in Hong Kong, they're very low. And the economics of offices in Asia are slightly different than in the Western world, because we don't have the homeless problems and so forth. And living conditions in Asia, in major cities, are not particularly good. So people actually like to go to an office. They don't want to stay home with their wives or husbands or children the whole day. They want to go to an office. I also have my own office building. I have the house where my family lives next door. But I have an own office building. It's nicer to be alone when you work than having all kinds of trouble the whole day with the household. So the economics of office is slightly different here. And we have stock markets that have been going down for 10 years vis-a-vis the US, and they're relatively low. The same applies to European markets. They're relatively low. And some sectors of the market were cheap. They have started to outperform. Like in Europe, the insurance sector has done well. And in Asia, just recently, say, in the last months, Malaysia was up almost 10%. This year, Malaysia in dollar terms is up 20%. It's not bad. I mean, it's respectable. India economically is doing well, but the valuations are very high. So what I'm interested in is the fundamentals, but the value is something bad, but the values are very depressed, and I may be interested to buy it. And if something is good, like India, but the values are expensive, I may not be interested to buy it.
Yeah. And in countries, so you mentioned a few countries there. Do you feel, for example, Malaysia, if we're talking next 10 years, so say we do have somebody who's considering leaving the West with his family, what nation states, they don't have to be in any individual year but are generally going to be on a better trajectory by a political direction, economic direction for a number of decades. So it's going to be your new home for 30 years, into retirement. Malaysia, would you recommend where you are? Are there any, so we've spoken about asset classes, now we're talking almost more socio-politically and bringing countries into this. Is there a move, like the gold was moving from west to east, is there also a better trajectory for sound money in Southeast Asia and other nations outside of the West? And anyone you would pick out?
Sound money, I doubt. That I doubt.
No politicians
want. No government has ever pursued sound money over a longer period of time. After the Second World War, we had sound money in European countries like Switzerland, Germany, the Netherlands. But nowadays, this is also gone.
Yeah.
But I'd like to say the following. I mean, I live in Thailand, partly because I have a Thai wife. And I lived 30 years in Hong Kong, and I wanted to have once land and house and space and dogs and all this nonsense. So the answer to your question is, if I were a young person, I would go as a first station either to Singapore or Hong Kong or Shanghai or Tokyo, I mean anywhere, or Brazil or Argentina or wherever in the world, and look around and see what I like. You understand? If someone likes the beach, then I wouldn't go and live where I live because we have no beach here in the north of Thailand. But if someone likes four seasons where you have a winter not with snow, but it can get reasonably cold, and you have a summer, and you have a weather that is relatively dry, whereas on the beach in the south is very humid.
Yeah.
So everybody has to decide for himself what he likes. I can't tell you which pill and which doctor you should go to. That is a decision an individual should take. And we talked about libertarian. I think one factor that you left out, you have to take your own responsibility and not sit there and say, oh, the government should do this and the government should do that. No, the government should do precisely nothing. And already Adam Smith, he noticed that the world, England, would be much, much richer if there had been no government in the UK. That is more than 200 years ago. I have a quote where he says, despite the regulation by the government, which certainly reduced economic growth, Britain has become relatively affluent. This is the fact. Governments everywhere in the world sooner or later reduce economic growth, inevitably. And the larger the government is, as you said, they're a parasite. That is the difference between capitalism and socialism. The socialists are parasites.
Yeah. Yeah, I think that's a great note.
And capitalism is built not on something that is stagnant. It is a continuous progress that develops through a renewal of ideas and innovations. That's the word. There are many books on the subject. One of the best is actually summarized in this book, Capitalism, Socialism, and Democracy by Schumpeter. And for people who don't have time, because he writes in a very heavy style, but there's a speech in it which he gave 6 months before he died in 1949 that describes how every successful capitalistic society will inevitably fall into socialism because of the jealousy, largely of the academics. They hate the entrepreneur who has no education and becomes rich.
Yeah. It envy. It's almost a crab in the bucket. It's a crabs in the bucket. The notion that one crab escapes is two reviles from. They're not going to cooperate and allow that advancement. They'll rather pull everybody back down.
It's a nightmare that the soccer player can earn so much money.
It is indeed. Excellent. Mark, it's been great catching up with you. Thank you for these cornerstone principles of what socialism really is versus capitalism. It's been a great reminder for our viewers. Do tell them also how they can find and follow your interesting thoughts and take on the markets going forward. Where do they do that?
Well, I'm not sure they're interesting, but I'm an investor. It's for me. I like money printing in principle for my assets, but I, as an historian, as a social observer, and as an economist, especially as an economist, I have to say, one of the greatest disasters that can come upon a society is money printing. It is a very, very devious way to penalize the lower classes and the middle classes and enrich the rich, the very rich. And it's been used by every government, and they always have an excuse, and they will always masquerade the economic statistics in such a way that it makes them look good, or they say we have to do it. It's an urgent measure. Nothing is very urgent, but they do it to gain more power and really hurt the poor. Inflation, that I want to, as the last word, spell out. Inflation is nothing else than a tax. This tax would not exist if the price level were stable. In other words, if there were no fiscal deficits. You understand? You have two islands. One island is mine. I collect exactly the taxes that cover my expenditures. You have an island. You say, in our island, we don't have tax. You just issue bonds all the time, more and more and more. And you will have inflation. I will not have inflation. And what will then happen is that your inflation is essentially replacing the official tax that I have. So you tax the people through inflation. I tax it through open taxation, value-added taxes, sales taxes, and income tax.
Yeah. Absolute cornerstones of the criminality of government and every positive.
I like the cornerstone of criminality of governments. Correct. That's
and there's no better way of saying it. Thank you so much for your time. And where do people find the blog, Mark?
I have no blog, but I have a website, and it's gloomboomdoom.com. I repeat, gloomboomdoom.com.
gloomboomdoom.com. Excellent. Thank you so much for your time today. It's been great.
I have no blog. Other people do the blog. Okay, thank you. Bye-bye.
Absolute problem. Bye-bye for now. Cheers.
Tired of profit wipeouts and blown accounts from following trade signal groups? Looking for a better way to trade? Why not be part of a principled, organized, and rules-based community and enjoy a constructive learning environment while practically trading the markets on a bespoke platform on browser and app specifically designed to teach and involve you while you're learning and growing as the markets move? This is not a Telegram or Slack signal group. All trade ideas are based on rational technical analysis through the HVF method that lead to fast-moving breakouts with tight stops and high rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help you get the job done quicker. Community updates every day by Francis and our 3 webinars a week provide a 360-degree watch across all markets and are presented by our highly experienced team of trade leaders to spot those potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. Transform your trading now. Transform your life. Book a friendly chat with us on the link below.